The global economic and political environment is a challenging risk appetite, so stocks are trading at a low ebb. Wall Street indexes closed in the red yesterday because mixed corporate reports by Morgan Stanley and Goldman Sachs worsened the pessimism of the banking sector. A sell-off of Boeing and Apple shares put pressure on the S&P 500. As a result, the three benchmark stock indexes incurred intraday losses, with the Dow Jones logging the weakest result. As a result of the sell-offs, the S&P 500 dropped by 0.37% to close at 4,765 points. Before the opening bell, market sentiment got worse. Futures on the major stock indexes shed another 0.5% in the pre-market. The S&P is expected to trade in the intraday corridor between 4,738 and 4,768. If the borders are broken, the seller's target is seen at 4,710 and the buyers could make efforts to grab the level of 4,780. The S&P briefly spiked to almost the historic mark over January 2022. However, it had to retrace on the back of troubled macroeconomic data and poor corporate reports. The economic calendar for the United States was empty on Tuesday, and the only high-impact event was a speech by Christopher Waller. The Fed governor moderated the market optimism and said that the central bank should not rush to cut interest rates. At the same time, Waller expressed confidence that inflation is firmly on its way to the Fed's target annual rate of 2% per annum. In the light of his comments, Fed funds futures now indicate a nearly 70% chance of a rate cut by 25 basis points in March. Apart from Waller's speech, the market digested corporate reports, which discouraged investors. Morgan Stanley shares plunged by 4.2%, the lowest level in more than a month, after the bank reported lower quarterly profits than in the consensus. Goldman Sachs shares closed with a modest gain of 0.7% as the company reported a 51% increase in its profits. The banking sub-index in the S&P fell by 1.2% to almost a one-month low on the back of weaker corporate reports. Apple also put a strain on the indexes. The company lost another 1.2% after offering discounts on its iPhone in China in response to tough competition there. Advanced Micro Devices shares jumped by 8.3% after Barclays analysts raised price targets for AMD and several other chip makers, saying that will benefit from a rise of artificial intelligence. Big rival Nvidia rose by about 3% to a record high that helped to lift the S&P technology sector, which was the only one to post modest gains. The remaining 10 segments lost one, led by energy stocks. The benchmark indexes spent the New York pre-market mainly in the red zone. In addition to the weak start of the reporting season, the indexes responded to a sign of a tepid economic recovery in China and signals of evident inflationary pressure. The combination of weak data for China and the dissatisfaction of ECB and the Fed officials against early monetary policy easing was complemented by the picture of a robust consumer demand. US retail sales rose by 0.6% after rising 0.3% in November and beat market forecasts. This is the biggest growth in the 3 months, led by car sales. The publication of the Fed's Budget Book may also influence trader sentiments today after the opening bell. And today, traders will have to absorb the views on the future policy from some Fed policymakers, including Michael Barr and Michelle Bowman. For now, despite all the rhetorical resistance from policymakers, markets are stubbornly clinging to the first rate cut in March after 2 years of aggressive tightening. Treasury markets are volatile today, with the 10-year yield hitting its highest level in a year and the 2-year yield rebounding by 16 basic points. Yields fell to 4.28%. In the corporate sector, Tesla shares lost 1.4% in the pre-market trading after the company cut prices on its Model Y vehicles in Germany, a week after cutting prices on some Chinese models. In the currency market, the US dollar hit a one-month high against a basket of rival currencies on Wednesday. The reasons are the same: global concern about the weakness of the China's economy and inflation. The dollar index hit 103.58, its highest since December 13, but later retreated slightly to trade at 0.15% lower. The basic intraday forecast suggests between the borders of 103.20 and 103.70. Going beyond these borders will lead to the dollar either back to 103 or up to 103.90. On Tuesday, the UK also reported on its inflation following Canada and the United States, and the UK CPI exceeded forecasts. The data helped the sterling, unlike other major currencies, maintain its position against the greenback. Data on the Eurozone's inflation were not surprising, no matter how hard the central bank tried to cool traders' expectations regarding rate cuts, and this did not help the euro. Market sentiment on forex may still be affected by the speeches of politicians in Davos, especially remarks by Christine Lagarde tonight. The Canadian dollar is extending its weakness despite stubborn inflation in Canada and another rate hike on the Bank of Canada's agenda. The USD traded at 1.3522 or 0.25% up in the pre-market. The instrument is expected to trade in the intraday corridor between 1.3490 and 1.3550. And today the loonie is hit by the double whammy: the strong US dollar and fallen oil prices. Crude oil prices were hurt by weak economic data from China. Both benchmark rates lost more than 2%. All in all, oil prices lost over 10% in 2023. Meanwhile, the crypto market is printing losses after a stunning 60% rally driven by expectations of spot Bitcoin ETFs. According to JP Morgan's estimates, inflows into exchange-traded funds hiked linked to the spot price of Bitcoin also fell to about $200 million. For the time being, BlackRock's ETF drew the bulk of funds. Classic cryptocurrencies, which spent most of the day in the red zone, are not doing any better than exchange-traded funds. Bitcoin lost about 2% in the New York pre-market, trading at $42,500 in the early hours. As for the intraday forecast, the base corridor has not changed and suggests trading between the borders of 42,100 and 43,200. Going beyond these borders can push the price either down to 41,600 and 41,100 or up to 43,700 and $44,200. Our review of American markets is over. Subscribe to InstaForex TV channel and we will keep you updated on the daily market developments. So good luck in your trading and see you online tomorrow.